How's everyone doing? Welcome back to another episode of The Banker Next Door. I hope everyone had a great weekend out there. So we're going to kick off yet another week of hopefully great episodes on the channel. So I have a great one for everyone here today. We're going to look at a potentially massive fraud from a company called Tricolor Holdings. This was a story that broke last week, and I followed the story kind of throughout the week as it just got more and more interesting. So we're going to look at a series of articles here from S&P Global Market Intelligence. I'm going to kick it off by reading a small little blurb to you guys, but also I wanted to show you just what this is, because this is what I thought was perhaps most interesting, was that how little coverage this actually got in the news media. Especially the business news media. I was very surprised at this, because this wasn't necessarily a small thing. So let's start off with reading this for a second. So this was the first thing that broke last week, and it basically said, and this was just a kind of a little AP clip that came out. Some banks, including JPMorgan Chase and Fifth Third Bancorp, are facing losses worth hundreds of millions of dollars from loans tied to consumer lender Tricolor Holdings, LLC. Bloomberg News reported, citing people with knowledge of the matter in a regulatory filing. Fifth Third said it expects to incur a non-cash impairment charge of $170 million to $200 million in the third quarter due to a discovered external fraudulent activity at Fifth Third Bank, at Fifth Third Bank commercial borrower. Now, again, and I'm going to say that this is alleged because, again, as far as I know, no criminal charges or anything have been filed, but it does appear to be a massive fraudulent situation. But so let's look at here for just a second. So this is just a basic Google search that I did on this Tricolor Holdings. We see here a couple of articles pop up. New York Post, auto dealer Tricolor Holdings files for bankruptcy. CNN, a major subprime auto lender, went belly up. It won't be like a subprime mortgage meltdown, but hopefully not. Kelley Blue Book, big auto lender, went bankrupt. Financial Times, debt linked to collapse subprime auto lender Tricolor Holdings, but nothing from the Wall Street Journal. Kelley Blue Book, I don't necessarily go to them as my, go-to financial source, right, for financial news. Car dealership Guy News, and the CNN articles behind a paywall, so you can't even look at that. And then Innovative Income Investor had an article up here. Now, let's look at a couple of things here, though. The CNN article says Tricolor, a major subprime auto lender specializing in buyers without Social Security numbers or credit history. That's interesting. Okay, so right off the bat, we're getting some news here. So it's a subprime auto lender that specializes in buyers without Social Security numbers or credit history, right? It sounds like a winning strategy. And then under this Innovative Investor, we get subprime auto lender Tricolor Holdings has filed for bankruptcy, and it is likely that they have billions of dollars of liabilities, billions of dollars. And then we see the website here, Tricolor. Let's see here. So here's their Tricolor Auto. Here's their actual website. Cars with APR up to 5%, lower than the competition. Better rates, better benefits. Plus, we report to credit bureaus to help build your credit. So just, kind of a standard website here. Nothing too crazy. But let's go into how this kind of whole thing unfolded here. I'm going to blow this up so everybody can see it. So starting here, Tuesday, September 9th, Fifth Third Bancorp faces up to a $200 million impairment charge over fraud claims. So Cincinnati-based Fifth Third Bancorp is facing a potential impairment charge of up to $200 million due to an alleged fraudulent activity involving a commercial borrower of its subsidiary Fifth Third Bank associated with their asset-backed finance loan portfolio. On September 5th, Fifth Third Bancorp said that the alleged external fraudulent activity would likely lead to a significant impairment charge. The loan in question has an outstanding balance of around $200 million, according to a regulatory filing. Based on current information, the company estimates that the non-cash impairment charge related to this asset-backed finance loan, expected to be recorded in the third quarter, will fall between $170 million and $200 million. The company is currently collaborating with law enforcement agencies to investigate the matter and has enlisted third-party advisors to assess the potential fraud-related losses that will determine the final impairment charge, the filing says. So law enforcement obviously is involved in this, and charges are going to come. Then we get this the next day. Tricolor Holdings CEO resigns from Origin Bancorp's board. So not resigning from Tricolor Holdings, but resigning from the board of a bank that he served on. So Daniel Chu, the CEO of Tricolor Holdings, resigned from the boards of Ruston, Louisiana-based Origin Bancorp and its subsidiary, Origin Bank. Chu informed the company and the bank of his resignation on September 7th, and his resignation took effect immediately. There were no disagreements between him and Origin Bancorp or Origin Bank. Tricolor is a customer of Origin Bank. Currently, the bank has total loan commitments to Tricolor of about $30.1 million, which are primarily secured by notes receivable. The loans are performing, but were placed on Origin Bank on non-accrual status in connection with the Chapter 7 bankruptcy case filed by Tricolor on September 10th. Origin Bank is evaluating the status and valuation of the collateral and any necessary additional provision for credit losses related to these loans. The bank intends to pursue all available remedies to protect its interest according to the regulatory filing. So Daniel Chu was on the board of this Origin Bancorp down in Louisiana, and he resigned, but this Origin Bank was also a customer of Tricolor. So we have kind of victim number one here. So now we go on to this also on September 10th. So Tricolor files for bankruptcy. The auto lender was once an ESG favorite. Now, I will point out that this article is actually taken from Barron's.com, but it was reported through S&P Global Market Intelligence. But the lender was once an ESG favorite. Very interesting. So a Dallas-based chain of used auto dealers filed for Chapter 7 bankruptcy protection on Wednesday. The liquidation plan was filed in U.S. bankruptcy court in Dallas. It lists between $1 billion and $10 billion in both assets and liabilities. Tricolor, which made loans to individuals lacking credit, had been identified as a socially minded investment by BlackRock and other major financial firms. Multiple U.S. banks faced exposure to the bankruptcy, including JPMorgan Chase and Fifth Third Bancorp. Tricolor was the focus of a Barron's investigation in November 2022 that raised questions about the firm's lending practices and the quality of vehicles sold on its lots. The firm said in a court document that its bankruptcy filing came after considering materially regarding the liabilities, obligations, and liquidity of the company and its affiliates, meaning it had no liquidity and its liabilities far exceeded its assets. The move follows a regulatory filing from Fifth Third Bancorp late Tuesday. We heard about that. Tricolor didn't respond to a message, no doubt. Tricolor operates 65 auto lots across 6 states, specializing in sales and loans to undocumented Spanish-speaking buyers. The focus has earned Tricolor certification under the U.S. Treasury as a community development financial institution. Wow, this is getting more interesting. A designation granted to businesses that lend to members of underserved communities. No one else is providing meaningful dollar credit to an illegal immigrant. Yes, nor should they. Chow told Barron's in 2022. The company began suspending operations and furloughing workers at its lots on Friday, according to reports on Industry Blog, The Car Dealership Guy, and other outlets. On Wednesday, JPMorgan securities analyst said in a research note that Tricolor was believed to be the company that drove the $170 million to $200 million impairment charge disclosed by Fifth Third. Fifth Third recently discovered the alleged external fraud activity at a commercial borrower. Fifth Third said in its disclosure, adding that it is working with the appropriate law enforcement authorities. Other lenders to Tricolor include JPMorgan Chase, which together with Barclays Bank, here's another bank involved in this, has extended $777 million in credit to the dealership chain, about $500 million of which has been used as of April 30th, according to a report from Kroll Bond Rating Agency. JPMorgan's total exposure to Tricolor is up to $200 million, roughly the same as Fifth Third's, a person familiar with the matter said. Ruston, Louisiana-based Origin Bank has about $30 million in loan commitments to the auto chain, Origin said in a regulatory filing. And again, we go through Origin. let's see here. Tricolor has bundled more than $2 billion in auto loans into securities for sale to investors since 2018, according to the Kroll report. Tricolor's most recent securitization was a $217 million issuance in June. JPMorgan, Barclays, and Fifth Third served as managers in the transaction. Tricolor said in a press release at the time. Tricolor's securitizations have been designated as social bonds, based on its commitment as a CDFI to lend to a target market of Hispanic borrowers. Financial institutions until recently touted their social bond purchases as part of their commitment to ESG, or environmental, social, and governance principles. BlackRock took a $90 million stake in Tricolor in 2021, which is about to be worthless, as part of its Impact Opportunities Fund, focusing on businesses and projects owned, led by, or serving members of minority groups. A BlackRock spokesperson declined to comment on the bankruptcy filings. Yeah, because they're going to be fired. In the 2022 investigation, Barron's found that Tricolor appeared to be selling vehicles for sums well above the averages for similar cars, as it touted its CDFI status, which serves as the government's social lending seal of approval. Barron's based its analysis on Kelley Blue Book value estimates. Tricolor was a frequent target of fines and violation notices from motor vehicle and financial regulators. Barron's found some Tricolor customers said in interviews that state complaint filings that they encountered mechanical troubles with recently bought cars that the company couldn't or wouldn't fix under its limited warranties. Chu told Barron's at the time that Tricolor sells cars at lower margins than competing dealership chains, spending generously on pre-sale repairs and reconditioning. Citations from state motor vehicle and financial regulators are largely due to missteps by outside vendors Tricolor worked with, he said. The Treasury agency that oversees the CDFI program, the CDFI fund, didn't respond to a message seeking comment from Barron's on Wednesday. Yeah, because this is a colossal, you know what? This is a colossal cluster bleep. This is not good. Okay, this is not good, and this is egg on the face of a lot of people here. And this is why you didn't see much on this in the business press, as it were. Businesses have scaled back or played down their ESG goals under President Trump. Yes. Separately, under Trump, the CDFI program has faced defunding threats and criticism over its policy of encouraging lending to target groups identified by their racial identities. Yes, again, this is, if you wanted to know why they were coming down on the CDFI program, it's because of this. Because the CDF program should have never been given to this company. So what this company was doing, in effect, was they were using government funds, government guarantees. They were using BlackRock money and other banks' money to basically go out and sell overpriced used cars that were all beat up, basically pieces of crap, to take advantage of illegal immigrants. Okay, just pumping them full of stuff, and then they sold it out. And then what were the illegal immigrants going to do? Okay, oh, I gave you a lemon. Oh, sorry, tough cookies. I'll tell you what. Here, I'll sell you another one. So this whole thing was shady from the start. And it goes back to the saying of everything that's woke turns to, you know what, you could fill in the blank there. It's just dumbfounding. And then let's go here. And then this was a Thursday, September 11th. So Triumph unit serves as agent bank for 60.5 million Tricolor loans. So here's another one. TBK Bank, SSB, a wholly owned subsidiary of Triumph Financial Inc., is the agent bank for a $60.5 million loan facility extended to Tricolor Holdings, LLC. The bank holds roughly $23 million of the total facility, according to a Form 8K filing. Tricolor's loan with TBK Bank was secured by collateral, which included a perfected first lien security interest in its vehicle inventory. Good luck trying to collect on that. The bank is working to secure and consolidate its vehicle collateral. Yes, yeah, you do that. And then finally, this last article here, also on Thursday, September 11th, Tricolor fallout casts a pall over some positive developments for Fifth Third. Yeah, I would say so. Fifth Third Bancorp announcement of an impairment charge of up to $200 million related to the alleged fraud in its asset-backed lending portfolio clouds some otherwise positive news for the company. The alleged fraud reportedly stems from a relationship with subprime auto lender Tricolor Holdings, a company that Fifth Third provided financing through an asset-backed warehouse facility. The development comes at an inopportune time for Fifth Third, as it will overshadow the company's otherwise improved credit trends in the third quarter. Were it not for this alleged fraud, credit would have been a good story. Gee, I guess so. And again, it just goes on to say, yeah, they're doing a relationship review. But let's go back over here to all the banks that so far are involved with this. So far we've got Fifth Third Bank, we got JPMorgan, we got Origin Bancorp, we've got Barclays, we've got BlackRock, and now we've got TBK Bank, owned by Triumph Financial. So that's 6 players in this. Some massive players, a couple of small players. TBK Bank has about 23 million out here. They're the lead bank on the 60.5 million loan facility. But undoubt all of these guys are losing money here. I wouldn't be surprised to see JPMorgan say that they're gonna cut off $200 million. Like, they're going to take a $200 million loss on this thing. BlackRock, undoubtedly, these funds are going to be impacted. But this fraud, I mean, you're going to have egg on a whole, the CDFI program is going to have egg on its face. All of this ESG stuff is going to have egg on its face. So this is, again, I think this is just getting warmed up. I think that there is going to be a lot more to come with this potentially massive fraud here with this Tricolor Holdings. I think a lot of people are going to have egg on their face, and I think there will be probably a few more banks affected by this as it continues to ripple out. So, but again, fascinating story. Another massive fraud uncovered, and we'll see what happens here. I'll keep everybody tuned. If there's any criminal charges, or if there's any kind of investigation that comes from this, I'll let everybody know, and we'll continue to keep an eye on it. But that being said, I will wrap up by saying, if you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to everybody. And make sure to check out some of the other content on the channel. I hope everyone has a good day out there, and I will see everyone again real soon. Thanks a lot.